Hello, everyone, to another episode of Stable School Podcast, live from Cannes. I'm your host, Raza, head of Growth Scroll, and I'm here with Gísli from Monerium. Did I pronounce your name correct?
You got it.
Okay.
Yeah. Earlier I said, like, it's not the Grizzly bear, but it's the Gísli bear.
Gísli bear, let's
it's
go.
an easy way to remember my name.
Okay, please introduce yourself and what is Monerium?
Yeah, so Monerium is the issuer of the EURe. It's a stablecoin. We'll probably dig a little bit into what a stablecoin is and how, where we fit into the picture. So I'm one of the 4 co-founders. We are now a team of 14. We are scattered across Europe. And the EURe last year was the second most used euro stablecoin. So there's a lot of usage, and we can probably double click on some of those use cases later on.
Yeah, 100%. You already alluded to it, and I'm going to catch you on it. You said, what exactly is a stablecoin?
Yeah. Okay, so I think everyone agrees there are broadly 3 categories, like the fiat-backed, the crypto-backed, and then the algorithmic ones, the more exotic ones. And by the way, I am all for experimentation in the space, but I think honestly that we need something very dumb and boring like fiat-backed stablecoins to kind of have the building block that others can then innovate on top of. So Monerium is a fiat-backed issuer. So we money is a political instrument, right? So it's not going to matter if the money is moving on TradFi rails or crypto rails. So we said, like, if this is going to be something that we put in the hands of real users, mainstream users, then it needs to be regulated. So we actually in 2017 set out to become the first e-money issuer that doesn't issue e-money onto like cards or payment schemes like Revolut or PayPal, for example, which are examples of e-money issuers, but actually to mint on public blockchains. So that journey took like 2 years.
Wow.
And we became in 2019 the first authorized issuer to issue on a public blockchain.
A very boring question, but like, how do you do that when there's no regulation? And to be quite frank, I've dealt with the ECB for years.
Yeah.
And you don't talk to people who understand blockchains.
Absolute, fantastic question. So, I mean, this journey involved, so the first hire at Monerium was actually a lawyer.
Wow.
So that's very unusual for the space, I would say.
For a crypto project, yes.
Yeah. So we hired the lawyer, and his tagline was to keep us out of jail. Like literally that was the job description. So we kind of, number one, had to identify which jurisdictions did have any regulation on, digital money, right? And it just happened to be that Europe had the e-money license for over 20 years at that stage, right? And the likes of Revolut, Klarna, PayPal had all used this same license to, make payments, if you will.
Interesting.
So we kind of identified that and said, like, okay, now we want to become an issuer. And that's where the journey started. And but we were in contact with multiple jurisdictions at the same time, talking to regulators, explaining. So the application itself was like 600 pages, right?
Wow.
And then probably another 600, in just correspondence, meetings. So we talked to most of the regulators in Europe.
Just diving into that a little bit, because so you're saying there was an existing framework and regulation.
Yes.
But what is e-money?
So e-money is a very simple thing. It's actually supposed, like the first line in the law is like, e-money is a digital cash independent of technology. So we're like, hey, great.
So it qualifies for blockchain.
Qualifies, well, right. Wow. But it actually took 2 years to kind of figure out if, money on a blockchain is actually money. So e-money is just this, it's a scheme where you have all the legal protections, and if you kind of fulfill the obligations, you could call this thing money, right? So our euro, even before MiCA, and we can talk about how MiCA actually ties into this, even before MiCA, our users were paying their taxes with EURe, right? That's how much of a money it was,
wow.
Right? But maybe just, continuing on that journey,
yeah.
Then, last year, MiCA kind of was, came into force in Europe.
Yeah, so MiCA, for the users, for the listeners, MiCA is the regulation in Europe that came to regulate digital assets.
Exactly, including stablecoins. And this was actually in response to the Facebook Libra project, if you remember that stablecoin. Yeah. So they were kind of, whoa, what is going on here? We need to, have this under control. So, but what MiCA did was it enshrines e-money as the correct license to use if you want to issue stablecoins in Europe.
That's a very good one-liner. You caught me off guard, but it actually had a lot more implications, right? Because and I want to get into how EURe is, for instance, different from USDC or under the hood. But one of the biggest implications of it was USDT was sort of banned.
Yeah.
Why?
Because they didn't fulfill the obligations, and there are a few. And honestly, I think Tether is probably they are the most profitable company on earth, per employee.
Yeah, I think that's actually correct. I saw something on LinkedIn.
Yeah,
those are
crazy numbers. So they probably, even though they stopped today, they're probably all millionaires for life, billionaires for life, right? Yeah. So I think they're kind of just focusing on their strengths, which is dollar access for Africans and where coins or currencies are not that stable. But I think just the mainstream market is just so much bigger, right? And so one of the ways is just you have to comply because, again, money is political. It's not going to matter if it's blockchain rails or not. Yeah.
So you're double-clicking on EURe. Yeah. How is EURe different from USDC? So
I think there are a few ways to contrast. So like USDC, we are fiat-backed and we hold reserves, but we actually have to, and now USDC is actually, or let's say EURe is MiCA compliant. They had their license out of France. So it's kind of very comparable to EURe, I would say. In addition, we kind of have solved, I would say, the way to on and off ramp.
Okay.
In an interesting way that, we, 3 or 4 years ago, we announced our Web3 IBANs, which, were quite innovative at the time. And now I see, at ETC this year, there are a few kind of copies of what we did. But as the issuer, we have certain privileges which make our solution way more efficient. So if we take the on and off ramping, and by the way, we don't even talk about on and off ramping, we just say payments. Some of them go on chain, some of them go off chain. You receive, it doesn't matter, right? So what we effectively did was that when we were launching, we were thinking about okay, so who's going to use this? And we needed to figure out a way to kind of lower the barrier for users to adopt stablecoins. And one of the most the mainstream way, or back at the time, was for users to actually go through the centralized exchanges and kind of buy money. That didn't make sense to us. And also, most of them, most of the exchanges that had were able to open up, say, bank accounts were all in dollar terms. Nobody was using the euro for trading, right? So that venue or avenue was kind of shut for us as a issuer of a euro coin, right? So what we effectively came up with was this, hey, there is another thing called IBANs, which we use for everyday payments, right? Why don't we just connect an IBAN to your wallet address? Why? That seems to make a lot of sense.
Yeah.
So we just built that. And, now over 1.5 billion euros have crossed from the banking system and back over our, Web3 IBANs. So every customer gets one. And you just make a payment, and the moment it hits the IBAN, we detect it and mint automatically on the fly, on the relevant chain, the equivalent amount of euros.
So how does that work under the hood? And I love the way you framed it, which is for the user, it doesn't matter. What matters for the user is it expensive, is it cheap, is it secure?
Yeah.
But for the stablecoin maxis out there, under the hood, how does this work?
So so it's actually not that hard. The hard thing is to make it scale and do things it's not that hard to make a single payment kind of work that way. Europe has two payment systems. They're both called SEPA. One of them is SEPA Standard and the other is SEPA Instant. And you probably wouldn't believe that those two payment systems don't share liquidity with each other. So it's like two separate chains for the crypto audience here.
I love that. I love that comparison.
But because we are regulated, and sometimes we even put suits on and ties, and we can kind of approach payment systems like SEPA as equals, right? We have the access to those networks. So it's all about just becoming a participant, and then when you receive payments, we get a notification, right? So there's a system in place that kind of automatically safeguards the underlying funds. So the IBAN itself, the money is never in the IBAN, so to speak. Like it's safeguarded according to the e-money legislation, and then at the same time we mint the tokens into existence.
Gotcha. What about the other way? So let's I have a Web3 IBAN.
Yep.
I pay for Netflix.
Yep.
What happens under the hood?
So under the hood, the reverse kind of is happening. So let me kind of just go a little bit into the minting process, because if you think about it, so there's an incoming payment. The user has, they've proven to us with an off-chain signature that they're the owner of this address. So we can do the linking to say like, hey, this IBAN here is the same as this address. But this address can belong to many chains, right? So the user needs to state their preference on which chain you want to have it minted, right? And we have a system like you can go into the UI, or we have like APIs where you can just move the IBAN around. So one payment will go to this chain, the next payment may actually go to another chain. But in the reverse, we actually don't have this problem. So we can share the IBAN for all the chains we support. So it doesn't matter if it's on Arbitrum or Gnosis chain or
like
Linear,
a wallet address
or Scroll.
Yeah.
Like a wallet address.
Yeah.
And we can just share that IBAN for the payouts. So if I just go through the steps, the user kind of indicates that they want to make a payment. Effectively, that is an API call to our backend. They will provide the destination IBAN, the name of the payee, the amount, and a signature. So with the signature, we have the permission from the user to burn those tokens. We go into the reserves, like the safeguarded funds. We initiate and we place them into the IBAN. So it kind of enriches the payment with your information. So when you pay to Netflix or your landlord or whomever, they will actually see your name, your personal IBAN, and not like Monerium. So it becomes really easy to reconcile on the other end for the payee.
And so what are the biggest use cases you've seen that basically you guys have facilitated to unlock?
Yeah. So if you would have asked me this question 2 years ago, I would have said something completely different.
Okay.
If you would have asked me last year, I would have said something completely different.
Okay.
So the space is kind of evolving rather at a very high rate.
You're making me very curious.
Yeah. So let's dive into it. So we actually had a really hard time onboarding users, in the sense of like, so now I have euros on chain, then what? And we're like, you can buy crypto. There's like DeFi projects. But actually we launched in a kind of a bear market. Nobody wanted to have crypto at that stage. So it didn't, kick off until we kind of reversed the idea to say like, hey, there's already a bunch of users out there who hold crypto, who have stablecoins, who have their salaries paid in, either a treasury token or, other stablecoins. And what if we just become sort of their bank? We're not a bank, but like a bank-like thing. And this is what caught on. So I would say probably the biggest single use case is, payouts from other stablecoins, right? So you get your salary, you convert it, or you make payments both on-chain and off-chain. So I would say this has been kind of the biggest use case. On top of that, we now have a few integrations with, Gnosis Pay, where the euros just become spendable on the card, or it's just instantly. So it's a self-custodial wallet. There's now also a MetaMask card being launched where you can use your EURe stablecoins. So this has become like a really big one. Earlier this year, or let's say like maybe late last year, we also started to see like cross-border payments emerging as a use case. Yeah. So we now see, and we're kind of broadening the scope a little bit. So we've started to onboard users for Brazil. So there's a lot of Brazilians living in Portugal, for example. Yeah. So you have those kind of connections from LATAM to Europe, Africa to Europe. And we're kind of trying to extend our offering so that, somebody who is in Brazil and wants to send money to their relatives or something like that can do it through EURe and our payment infrastructure.
And what's the biggest bottleneck you see for your next phase of growth? Because just to shed some light, I like how you framed this thing. Oh, if you would have asked me 2 years ago, 1 year ago, and that just shows that crypto is reaching maturity or like a next stage of maturity.
Exactly.
What is the biggest bottleneck, like let's say for you guys, where you say as growth?
So I think there are two things. One of them a little bit more in the future. So I would still say, with MiCA, the playing field is leveled, right? There's a lot of clarity, and it's much needed for the space, to take off. Right?
It's very interesting, by the way, because I often hear a lot of criticism from MiCA.
MiCA is not perfect, and we can go into that if we have time. Yeah. But I have many reservations on some of the implementations of it, but it's good enough for now.
Okay.
I would say probably the biggest blocker right now is just liquidity. Like if you think about the stablecoin space, it's 99.8% denominated in US dollar tokens, right? The euro being maybe 0.1%, and all the other remaining currencies 0.1%. So by definition, there's not a lot of liquidity to exchange, swap, lend, but it's coming. And we're actually, I can't reveal anything now, but we're working on something pretty cool that I hope to become sort of the equivalent of the Web3 IBAN, just for liquidity.
Wow. Okay. Well, you're making it difficult to not ask because you already said like you can't announce it, but maybe we can tap into the philosophy of that a little bit. Yeah. But I do like the point that you're raising is that, obviously the market never lies. The market decides. Yeah. The market is the market's always right, which means that if there is a huge supply for USD denominated stablecoins, it means that it's asked for as well. Yeah. At the same time, I think you and me would agree. Like I live in Europe. Well, not recently. Recently, I've moved, but Europe all my life. Yep. And I just need a crypto version of like a euro-backed stablecoin. Yep. Where do you see the demand? Do you see a demand rising in Europe for euro-backed stablecoins?
Yeah, I think so. Okay. So have you heard the concept of a stablecoin sandwich?
No.
No. So I will briefly go through that now.
Amazing. It sounds really cool.
So there is a theory that the dollar will be the only stablecoin that needs to exist.
I have a fear.
Yeah. And the theory goes, okay, so, stablecoins will be used as the rails, like between jurisdictions, but it's all about like local convertibility from fiat in Brazil, for example, into a dollar token, settled over the world, and then local convertibility into whatever fiat currency is there. So the only token you actually need for this is the dollar. I don't subscribe to this idea for a number of different reasons. The one that you alluded to, I don't think strong currency zones will allow this to happen. Like there will be a regulatory pushback. And we actually seen that with MiCA. There's now kind of a limit on the amount of dollars that you can issue for payments because Europe doesn't want to have dollars for payments, right? So we'll see more and more of that. The main question for me is like, will Europe enforce those rules? Like, I don't know. Like, let's see. And the other thing that I think all of us here, like builders, like Scroll, like our mission is to put the world's economy on chain, right? That's why we're here, essentially, just if we boil it down. And in that world, you need more currencies, not fewer, and especially not just one. So yeah, I think like many, and we are starting to see demand pick up. I do expect, like with more stablecoin issuers out of Europe, that we'll see more demand and more kind of usage. The main thing that I see with basically all of the stablecoin issuers, they have their distribution strategy seems to be just through the exchanges. So I think that's going to be a very crowded space. And we like to differentiate ourselves by leaning heavily into DeFi. And that's how we want to that's the future we want to build.
This is you're going into an interesting direction. First, I want to emphasize the point. I think that it's never good to have like a lack of diversity in the asset space, in the currency space. It also creates a weird dynamic of power around one currency. And I think just like baseline, I'm not very philosophical, but I just think that political wise, you just mentioned it, money is political. I think this is very dangerous.
Yeah.
I have a question, like this is very interesting because I see the trend moving of almost like, let's bring stablecoins to the other side.
Yeah.
To throw a buzzword in there, real world assets. You see more stable coins, yield-bearing stable coins, almost functioning like a money market fund, like attracting capital and bringing it off chain.
Yeah.
You're going to the other direction. You're saying, no, we're bringing euro to DeFi.
Yeah.
Can you tell me a little bit more?
So, I mean, I think it's very interesting. So, as I mentioned earlier, we have this Web3 IBAN. I think it's the thing that is needed in order to solve the last mile problem of actually bringing the rest of the world on chain, right? But if we fast forward 15, 20 years, and it's probably going to take, decades rather than years, even though I'm the naive optimist, to actually just kill those connections because they won't be needed. Money will just be on chain. It's like if you go back a few years and when the internet was kind of emerging, you'd have scanners, office scanners, and you would scan some documents and you would like digitize them to be able to send them as email, right? On the other hand, you'd have a printer because all the filing system would be, cabin based, right? Today, nobody thinks about this. The information just exists digitally from day one.
It's unimaginable for a lot of like youngsters being like, what do you mean?
What do you mean? Like, what is a scanner?
Yeah.
Like, why?
Why?
So in this world where we've killed the bridges because we've all collectively succeeded in bringing the world's economy on chain, where's the liquidity? It's going to be in those protocols, whether it's like Aave or Balancer or, that's where we're headed, whether you like it or not, in our view. I could be wrong.
Yeah, well, I definitely like this line of thinking. You just mentioned bring the economy on chain, the world economy. We believe that actually as a narrative. Yeah. We run it very hard, like, building the open economy.
Yeah.
And for me, the emphasis on open being because you want to make sure that you provide the financial infrastructure for people to efficiently have access to, let's say, or move funds around.
Yeah.
And so maybe double clicking like moving funds around, payments, Gnosis Pay, you guys are integrated with them. Mm-hmm. How is that adoption going?
I think they're on a really good track right now. I saw some graph the earlier day, like it's just up and to the right. It's still fairly small, but it's growing pretty nicely. And now they're kind of also going into other jurisdictions, so I do expect this to pick up very nicely. And I would say kind of, this is you mentioned like openness and building for the open. Like this has always been our strategy to go to market through the builders. And it's kind of hard because it's kind of like build it and they will come, ? You know? So the initial use case, we had to bootstrap ourselves. So we created this UI that I mentioned earlier, which was basically just used to showcase the infrastructure, right? And Gnosis Pay is probably the first use case that uses our infrastructure wholly. Like we have an agreement with them where they kind of onboard the users. They have the cards, so there's a KYC involved. We share that data. Like there's a pretty nice alignment there. And this is actually how we think about, scaling things. It's like, and I'm actually hoping for some KYC solutions to emerge sooner rather than later, where the users kind of selectively can use their information to just, with a click of a button, like share the required data with the issuer or the exchange or whatever is needed. And just with a single click, you're kind of there, right? So, yeah, I think that is always how we perceive the future. But it's definitely a hard path.
Yeah, for sure. And actually talking about the hard path, I think that where we've seen crypto adoption, there have been very apparent reasons. People who were left to governments that were not necessarily had their best interest, and I'm alluding to like currency volatility that was outside of their reach of control. So that it makes sense that they were looking for assets that were wealth preserving, and now for the next generation, wealth increasing, like yield bearing, etc. Europe is slightly different, and I always get frustrated by my friends from different parts of the world that treat Europe like a country, because Europe has like many countries, and I do understand, like relatively speak small, but user behavior is very, very different. Like for instance, in the Netherlands versus Germany, where Germany is like very much cash based, Netherlands not so much. You're not dealing with currency volatility. You actually have access to pretty savvy, let's say, financial rails, and yet I'm with you. I'm a vivid believer of like bringing this part of the economy also on chain, but it's a different strategy.
It is.
And so could you like maybe tap into that? Like, how is it different from?
Yeah, I can. So as you mentioned, like you're from the Netherlands originally. We've seen sort of feature requests from Germany that nobody else has, right? So I come from Iceland, which you can probably hear by my accent. In Iceland, we are part of Europe, but we had some of the worst financial crash, when everything collapsed during the great financial crisis of 2008. All the major banks just went bust overnight, right? And the central bank actually had to step in to guarantee all payments of all credit card holders in Iceland because nobody trusted anyone, right? So when we set out to build this, it was not just about kind of the technology, or like I can go into like details why I think this technology is just better than what exists, but it's also way more transparent. That's a two-sided thing, of course. We can talk about privacy as well, which I think is very much needed. But at the same time, you have some auditability things that you can actually prove that you're liquid or solvent, right? So I think there's some of that that we need to make sure that we can demonstrate that the issuer or whoever holds the underlying assets, is actually reputable.
I think I think that there are even many different angles you could approach this from, because it's definitely solving a different problem, I think. What's flabbergasting to me is if you look at the history of Europe, where the EU was created and the euro was came to life, and then the trade contracts that we have, like the agreements that we have, it seems like such a natural progression to bring the world on chain, or Europe, let's say, on chain. At the same time, do you feel like that there's like maybe some form of a fear from like ECB and like definitely like the European Parliament towards like this new system?
Yes, I think so. I mean, if you think about MiCA, like it originates as a response to Libra, like the stablecoin project by Facebook, right? So this was a kind of a defensive mechanism. And then on the other hand, you have the European Central Bank talking about CBDCs, right? And like, for me, it doesn't make any sense at all. Like we already have the digital euro. It's called the EURe, and there will be others. What the central bank should be doing is kind of fostering competition. So I think that is also you can actually hear it in all the commentary and responses. Like it's about preserving monetary control, but I think you can do it through regulated entities, Like Monerium?
I just feel like every single time when I look at Europe, especially in the past 15 to 20 years, like I come from TradFi, I worked for Dutch banks and when I at Dutch insurance companies, it just is always reactive. Like even MiCA is a reactive response, and it feels like, and obviously I carry a soft spot in my heart for the Netherlands. Like I grew up there, but it's just like there is a way where we can be at the frontier of, let's say, innovating doesn't just happen in tech.
No.
I think that there are certain jurisdictions that have proven, like I think that they became very crypto friendly, like Portugal. Portugal was like one of the first, I think, in the European countries. I'm not sure if it was Germany or Portugal. They were like, from a tax point of view, being like, okay, we recognize as assets, but we want there's talent engineers, their founders. Lisbon for the longest time became a hub in Europe for talented founders, and then we lose it so quickly as well.
Yeah, that is the thing. It's a sad part about Europe. I mean, I think actually the time could be now if we decide to kind of, like, I think you have, somebody in the White House who is actually just saying, I want to depreciate the US dollar.
That's crazy.
That is a reality.
Yeah, that's...
So the euro has not been as strong against the dollar for decades, right? So if Europe can kind of pull up their pants, this could be a really good time. But in order for that to happen, it's not about the tech. We already have all the founders, the builders. We have that shit we got, right? But probably what needs to happen is to have like bonds markets that are big enough to replace, partially at least, the US bond market, because you need that to exist for everything else. And the only way to go there is kind of a unified issuance where the whole union is kind of backing the issuance. I don't know if we'll get that consensus on that among the member states, but I think that is the only way we can kind of really showcase strength.
Do you feel like MiCA opens up competition for Monerium, or is it?
Of course. I mean, we see many more entrants, and we'll see many more entrants. So kind of getting that clarity now opens up things for banks to move into the space, which I actually think is a good thing, a net. It's going to be a fierce competition, and some of the other issuers are going to play to their strengths. Maybe they have big balance sheets. Maybe they have, institutional access that we don't have.
Yeah.
But our comparative advantage, I would say, is kind of being this nimble project that can kind of go deep into DeFi. And like we've seen news of, stablecoin issuers backed by banks that just are having internal struggles in deciding whether to use the left or right foot. Right?
Yeah.
So we can just power ahead, and that's what we intend to do, basically.
Yeah. It's definitely different, and I like it where you say, we see the trend going that way, and you're actually not ignoring it, right? Because the partnership with Gnosis Pay, and we were just talking about like Ether by Cash, like you guys are like, hey, we want to make this available for everyone. Payments, huge use case. I personally like the idea of Europe playing a bigger role in DeFi.
Yep.
I think that something that probably is out there, I've not explored it yet, is yield-bearing Euro stablecoins, and which I think is ripe for, let's say, a player to come in.
Yep.
I feel like we can go on and talk for hours, but maybe wrapping it up. What's next for Monerium? And let me give you the floor, but not just like the next year, but what over a longer horizon of, let's say, 5 years.
Yeah. So I'm a very sort of like, what is the problem right now and what can I do to solve it? So as I mentioned earlier, I think liquidity is just our biggest bottleneck right now. I think that the landscape has changed. Like we've seen this work because you mentioned yield-bearing stablecoins. So if you take EURe on Gnosis chain and you put it into Aave, you get more yield on it than in TradFi. And we see some of the wallets kind of abstracting this away, where it's just a savings account, and you just, now it's become yield-bearing. So making sure that all the stakeholders in that ecosystem, so if you want to have yield in Aave, you need to unlock the trading volume, because they depend on chain fees, right? Oracle prices. So if you don't have enough volume, you won't have that. So you can't have yield, right? So it kind of all boils down to, number one, solving that liquidity exchange, exchanging crypto assets, stablecoins for EURe. That is the main thing. And we've seen it work at a small scale. And now I'm just very focused on making that a reality for all the chains we support. And this includes aggregators, solvers. It's a jungle out there. But I'm kind of aligning everybody to hopefully make this a reality soon.
Sounds like a real power move is coming.
Yeah, hopefully.
Okay, you're really not letting it go. I love it. Gísli, am I pronouncing your name correct? Okay, it's a very unique name. Gísli, thank you so much for joining me. This was a refreshing talk. As you can imagine, I've been talking about USD stablecoins all day, but EURe, I'm all up for it and rooting for Monerium.
Thank you for having me.